Good morning, everyone. Welcome to another RF Crypto video. Today's markets are doing fine after the Fed's meeting yesterday. The crypto market is up by 3%. It's up to 1.82 trillion. It's slowly creeping back to the magical $2 trillion number. Bitcoin is up by 2.74%. As always, Ethereum has exaggerated and overreacted and is up by 4%, which is higher than the general 3% increase. In general, as you can see, the markets are in the green. We see some reds, but these are stable coins. Looking at the top 50 coins, most of them are green. The ones that are in red are probably down due to token specific factors and not due to the general market news itself, because the general market has put up some positive news, which I'll speak about in a minute, in terms of interest rates, inflation, economic growth, and unemployment. So all of these factors contributed to this 3% increase in the global crypto market cap in the last 24 hours. The price of Bitcoin now stands at $40,859. It's trading between the $40,000 support level and the $42,000 resistance level. As I said yesterday, the price of Bitcoin broke through the $40,000 old resistance level, and I stated that it would trade between the new support level. So the old resistance level became the new support level, and 42,000 became the new resistance level. So barring any sort of incredibly good news or barring any bad news, the price of Bitcoin would continue to trade within this small band. There was some good news yesterday. It wasn't significant enough to make it break the $42,000 resistance level. Looking at Bitcoin's leverage ratio, it's now standing at all-time highs. If you can see here, it just shot up from 0.19 to almost 0.22, and this is a massive increase. The markets are now relatively highly leveraged, and any sort of future decreases in price due to any bad news will have a lot of these leverage positions being liquidated, because it is a fact that most of these positions are in the long, especially since we saw the price of Bitcoin going up in the last few days. So whenever the price of Bitcoin goes up, or whenever the crypto market in general goes up, leverage tends to increase, and it tends to increase in the long position because people become less fearful, people become more risk prone, so they want to make more money by taking more risks, and they do this by taking more leverage. And now, because the price is going up, they think it's continuity. The price is only going to keep going up. So they take mostly long positions. Obviously, there are a lot of people that take shorts, but predominantly it's long. So if there's any sort of bad news that leads to the price of Bitcoin going down, I'm sure we will see this leverage ratio dropping and the price of Bitcoin dropping then more than what it's supposed to. But if the price of Bitcoin goes up and breaks the new resistance level of 42,000, we might see a closing of positions, not liquidation, and people making a profit, and the price going further up than it's supposed to. So leverage works both ways: extreme losses or extreme wins. The Federal Reserve lifts rates a quarter point, so 0.25%, and signals more hikes to come in 2022 and beyond. So they raised interest rate by a quarter percentage point and signaled hikes at all 6 remaining meetings this year. So there are 6 more meetings in 2022, and they're saying that every single meeting we will have a rate increase, which means that by the end of the year we will have at least a 2% interest rate in the United States. And this increase in interest rates from 0.25 to 0.5 is the first increase since 2018, after 2 years of holding borrowing costs near zero to insulate the economy from the pandemic. So during the pandemic, the interest rates were kept extremely low at 0.25% to make borrowing a lot easier and to stimulate spending in the economy so that the economy does not go into a recession. And how this works is that because the borrowing rate is so low, people borrowed more money because it was super cheap. The interest that is payable back to the banks was very low. So yeah, people took a lot more money and a lot more loans out to buy houses, to buy cars, to buy goods, especially during Christmas, and this kept the US economy afloat. And because the pandemic is sort of now, we could say, being slowly defeated and we're being pushed back to normalcy, coupled with the fact that economic growth in the US has been very strong, it gives policymakers in the Federal Reserve some room to increase the interest rates in order to control the almost 8% inflation that has been the highest in the last 30 years. So in general, what happens is that if you increase interest rates, inflation goes down. And how this works is increasing interest rates makes cost of borrowing more expensive. So people borrow less money, there is less spending in the economy, there is less money being created, therefore there will be less money for the number of goods available in the market. And when there's less money available for goods in the market, then inflation slows down. Because if we use an analogy, let's say that we have a cell phone for sale at $100 and we have $100 in the whole global economy. If we just print another $100, but then we do not create another phone, then the cost of that phone will go up to $200 because now the amount of money backing the number of goods and services in the economy do not balance. So either the amount of money has to adjust or the price of the goods and services have to adjust. And that's how inflation works. If you print more money, you have to increase the prices to compensate for that printing of money. It's a zero-sum game. So Jerome Powell said that the American economy is very strong and well positioned to handle tighter monetary policy. And this caused the S&P 500 index to rebound and grow by almost 3% due to this statement. And because of this, because of a stronger economy and because of such reassurance, the crypto markets also went up. Remember, crypto and stocks are completely separate asset classes, but they're still correlated. Whenever the stock market goes up, crypto goes up as well. And this is exactly what happened. And also, crypto does very well in a strong economy. So the fact that Jerome Powell said that the American economy is strong, has no problems, and it can handle all these rate increases is sending a positive sign to the entire market, including crypto. And the people in the crypto market reacted swiftly by buying more crypto, going more into crypto, and this led to the crypto market going up by 3%. And it's quite clear now that the Fed is more than doubling down on addressing inflation. Of course, inflation has been extremely high. They say that it's about 7.9%, but in reality, it's probably closer to 15 to 20%. It's the highest it's been in the last 30 to 40 years. And obviously, it's not a good sign for the market because it's eroding the value of the currency. Therefore, it's in the best interest for the Federal Reserve and the American people. And because the American economy is the strongest in the world, the global market in general, it is in their best interest for the Fed to control this inflation. And following the Fed's track record, I think they're going to do a very, very good job and inflation will go down eventually. So relating to this new dot plot, officials' median prediction was for the benchmark rate to end 2022 at about 1.9%, in line with traders' bets, and then rise to about 2.8% in 2023 and 2.8% in 2024. So because inflation has accelerated due to the fact that fuel prices have gone up, food prices have gone up, the Fed will need to increase interest rates at a more aggressive pace, and this 1.9% might not come true. The 1.9% was a prediction before the whole conflict in Europe, and now I think that it will be closer to 2.5%, even maybe 3%, depending on how the price of oil and staple foods react in the next few months. And this 2.8% might be upgraded to 3.2, 3.3%, but it is a matter of how prices react. We have to understand that this is all dependent on global factors, and these things change from one day to another. So these predictions can be accurate, but any sort of disruption to the global financial system leads to a small adjustment to the predictions. And on other news, the Fed said that it would begin allowing its $8.9 trillion balance sheet to shrink at a coming meeting. What they mean is that they will start selling their treasuries and mortgage-backed securities that they have in their assets in order to decrease this balance sheet and to remove money in the economy in order to control inflation. So as I said before, the more money you have in the economy for the same number of goods, the price of those goods will rise. But if you remove money from the economy and the amount of net money in the economy rises by a small amount, and the increase in goods and services each year, which is the increase in GDP, can match that, then we can have inflation rate controlled between 0 and 2%, which is the Federal Reserve Bank's aim. So they say that the purchases of treasuries and mortgage-backed securities, which I told before that they're going to start selling, these concluded these months. And obviously, they were intended to provide support to the economy during the pandemic, and they amassed almost $9 trillion in their balance sheet because they just kept on injecting money into the economy. Buying treasuries, buying mortgage-backed securities from the public means that the Fed prints money and they inject it in the economy by purchasing these treasuries and mortgage-backed securities. And now they need to undo this by decreasing the size of their balance sheet. Following the rate increases and taking into account future rate increases, the Fed officials said that inflation will be significantly higher than previously anticipated, obviously due to the crisis in Europe, and it will stand at almost 4.3% this year, which is a lot better than last year, but it will come down to 2.3% in 2024. 2.3% is a very acceptable number, and it's what we had before the pandemic started. Also, the forecast for economic growth was lowered to 2.8% from 4%, which isn't bad. 2.8% is still in the positive. It's still higher than 2%, which was quite the benchmark before the pandemic. And when Powell said that the US economy is strong, there is reason to believe that it is strong. It will be capable of taking the hit from increased interest rates without going into a recession. And I'm sure they will not go into a recession, and they will remain above the 2% economic growth rate. There are also some other positive news that caused the markets to react in an upward way, and that gives more certainty that the US economy will recover swiftly and will recover in a disciplined manner, because American households are in a strong position. Unemployment rate is at 3.8%, which is very low, and savings have risen throughout the pandemic. It's been postulated that the higher the savings, the higher the future economic growth rate, because people are taking their money, they're keeping it now to spend at a later stage, meaning that we are expecting economic growth rate to go up, and we will need people to spend this money going forward, because the increase in the interest rates will hamper economic growth. So the spending of these savings might just provide the cushion so that the economic growth rate does not go very low. And with that, we come to the end of today's video. Thank you very much for watching. I hope you enjoyed it. If you did, please leave a like, hit the subscribe button, share this video with your family and friends, and I'll see you tomorrow for the next one. Invest wisely, and cheers.